One of the most important reports in the world of business is a report called the income statement or the profit and loss. And as the name suggests, this report is about disclosing either profit or loss. And here we have the example of the income statement of a company Apple. The figures are in $1 million. And as you can see, the top part is money in. It's about sales or revenues. Then we have the middle part, money out. It's about costs and expenses. And then we have the bottom part, which is money left over. It's either profit or loss. The top part is the part where a company records revenues or sales. And we just need to be aware and ask the questions whether this part includes or doesn't include the VAT, GST or sales tax, or is it just a net without the tax. The middle part of the report is the interesting part. It is the part where company records costs or expenses. And as you can see, we can have a different type of expenses. For example, in our case, we have cost of sales that are quite significant. Then we have selling, general and admin expenses. And then we have depreciation and amortization. And of course, there can be many other types of costs and expenses. Obviously, the most important line is called the bottom line or money left over. And this is the area where we record either profit or loss, which is a difference between sales or revenues minus costs and expenses. And in our case, we can see that we have a positive figure, which means profit, and the company is profitable here. And one of the important facts about this report is that we always look at this report for the period of time. It means that we monitor sales or expenses or profits or losses for a certain period of time. Let's say from the 1st of January until the December 31st. All these pieces of information and much more are included in my new book called Decoded: How CEOs Become Financially Savvy. And if you send me an email or a message, I'd be happy to send you a sample PDF copy.